Hello and welcome to another financial analysis video. Today I'm talking about Nucor, who is the only steel producer in the S&P 500, and they really had a good earnings report, beating expectations by 22 cents a share, or 44% of a beat. And the last 4 quarters for them have been, really strong. But as we take a look, the first thing I see is obviously earnings are down compared to the same quarter of the prior year, and forward guidance is getting a little bit choppy for them, and rightfully so. They are in a competitive global business, which is about, in my opinion, to go through some changes. By the way, solid dividend at 3.5% for them. One of the things Nucor is dealing with, just like any other global business, is a decline in revenue. And as I said in my video on Procter & Gamble, the global market from a currency standpoint really is about to change. I believe, and I could be wrong, that the dollar is going to strengthen against other international currencies because there's still some more weakness in Europe and even some in China that really can't keep up with the growth that's going on here in the United States. And as a result, I think Nucor is going to really see competition again from foreign steel, cheaper foreign steel, etc. And their ability to export is going to be greatly compromised as a result. And they're already seeing some of the revenue pressure, like I said, but you have to commend management here in terms of strong operating cash flow performance, strong free cash flow performance. Nucor is not performing poorly because of the circumstances they're in. They're actually performing well. However, I believe that the stock is going to be weighed down by some of these global concerns. And so it may be one of those, as I've talked about with Caterpillar and others, if you're long-term dollar averaging, you may have a decent point of getting in. But, in the meantime, I think I see this company trading closer and closer on par with book value, and also seeing this earnings yield increase over time. The earnings yield at 5% is interesting because that implies 20 times, or in this case 21 times, trailing PE. So the pressure that comes on this stock, and by the way, this is compared to an S&P 500 that's trading at about 18 times trailing PE. So the pressure that I think is going to come on this stock is actually going to drive that PE down a little bit more. I think mid-30s is a more rational point for me to jump in on this. But again, it's not that I'm hampering the performance of the company, but the global economic environment around it just isn't favorable at this time. I hope you enjoyed this video. Happy investing.